Good afternoon, everybody. Welcome to the Trader Merlin Show. Hope you had a great session out there. A little bit of an about face, even though it looked like the equity markets might roll over. We had a decent day today, so hope you all did well. No new trades for me. Still holding those MicroStrategy puts, the Meta puts, and my long position of MicroStrategy, which got crushed yesterday, but a little bit of a bounce today, which is very, very nice. We'll talk more about the markets overall, but I wanted to go to the FOMC meeting minutes to start off. I guess I should start off by just saying, hello, everybody. You guys are always here with such reliability. Michael Coleman in Fort Mill, South Carolina. I know I've got Cape Canaveral. We've got less gold out there in Cape Canaveral. I met a girl, it was a couple days ago. Her last name was Canaveral. And it was like the ultimate interline. Like, do you own the whole Cape? Does your family come from money? You want to watch a rocket take off? But I'm dumped. Oh, the puns. Anyway, hope you all are doing very well out there. Let's dive into that FOMC meeting minutes. And bottom line is, it's one of those reports that I think most people just don't understand or don't pay attention to. And realistically, all it's showing you is what were the other members thinking with regards to rates or policy or inflation, which could help formulate your opinion about where markets may go in the future. And from the gist of it, most members, a majority of them, were feeling that more rate cuts were in order for the remainder of the year. Now, it didn't say whether they all thought we should have 2 more rate cuts, or should it be 3, or is it just 1, but bottom line is rate cuts coming. So that's my graphic here. I got more rate cuts coming. I tried to have a nice cool graphic here with some businessman walking in a percentage sign. I don't know. AI has helped me out so much with this one. So ultimately, what does it mean? Well, it means that we're going to get probably 1 more rate cut, and we already saw that. The markets have already priced in that 25 basis point cut. How do they know? How do these traders know that that's most likely going to happen? Again, I believe it goes back to connections, power, and just who you know. I don't know any of the Federal Reserve chairman myself. I don't know any of the participants. Never met them, never gone out to lunch with them. I'd love to go out to lunch with Jerome Powell or Miran, anybody, right? It'd be fun just to have a talk session with them about what they're doing. However, that's not me. That's not who I am. I have horrible connections. I'm the worst networker you will possibly ever meet on this planet. I've met so many powerful people, yet for some reason I just don't stay in touch with them. Stupid me. Anyway, let's go look at the FOMC Fed Funds Watch tool, which we already know is our forecasting to a 92.5% probability that we're going to get a 25 basis point cut at our October 29th meeting, which of course is the next one. Now, if we go all the way out to December 10th, the markets have priced in 2, and you see a pretty significant increase here. It's 79.7% chance. So let's round it up to 80% probability that we're going to get a rate cut at the October meeting, and then another one on December 10th. And now, is this good or bad for the markets? Well, for me, I think it's going to be good. And I think the markets are reflecting that. We are in another scenario. Well, let's take a step back. I think it's going to be good because that cheaper money means more stimulus for the economy, and therefore we should start to see some economic improvements, more profits, and stocks continue to move up. The challenge is, how long is this government shutdown going to go on? We're not getting any federal data, and there's some pretty important pieces of federal data that are supposed to be released over the next few weeks. So if this drags on, the visibility into the health of the overall economy is going to start to get a little bit murky. And we're going off of expectations about what industry believes we're going to get for things like unemployment, GDP, CPI, manufacturing numbers. All those government reports are put on hold. So it makes this next couple of weeks until we actually get a settlement here with regards to the government shutdown. It makes it like we're driving blind. Imagine if you're driving your car right now. Back in the day, where I'm showing my age here, but let's imagine you have a stick shift. For the millennials, there used to be this item you actually had to manually move to shift gears in your car. If you were a manual transmission person, there's gauges on your dashboard, like the tachometer that you would use to measure the RPMs of your vehicle so you knew when to shift that vehicle. Well, imagine your whole dash panel goes out. All of it. You don't know your tach, you don't know your speed, you don't know your fuel, you don't know your oil pressure, you don't know if your lights, well, you know your lights are on because you can see the lights. But what I'm getting at here is when we don't have all those gauges, it's still able to drive the vehicle, right? Especially if you have a lot of experience, you understand the RPMs, the sound of the engine, etc. But like Mamon says, shift by ear. Absolutely. You shift by ear. And that can work for a while. In the economy, with the market, I think that the longer this goes on, the more likely when the government reopens, there could be big swings. So just kind of keep keep your eye on how long this government shutdown goes on. The previous one was over a month. If this goes on for a month, that means we're getting a month worth of reports. And that is a core PCE price index. That is the unemployment rate. That's your PPI, your CPI, your GDP numbers. All of that will be delayed. And if those numbers all of a sudden come out at once as they're released, or maybe they're incrementally released, that could create a pretty significant move in the market. So when we come out of shutdown, if it happens at any time soon, I would definitely encourage you to be careful, because there could be volatile swings when those data points are released, if in fact something is off track, right, off of the trajectory that it's been on. But most of this stuff, for example, we'll go out here and look at Forex Factory and just kind of take a peek at what is coming out. Here's the remainder of this week. Let me delete all markets except the United States. Might make it a little bit easier for everybody. I'll filter out everything but the US, take out the miscellaneous and speeches, garbage, and let's apply that filter. So here's the remainder of this week. Nothing here is really that dramatic, but if we start to go out a couple of weeks, next week we do have some pretty big stuff, right? Next week you've got producer price index, you've got consumer price index, you have retail sales, you have non-farm employment change, and you have the unemployment rate tentative to be released. Now, why is the unemployment rate released on October 17th and not the 1st of November? Well, because we didn't get the 1st of October number to be released. So right now, markets are driving blind. They don't know if this is in fact 4.3%. And if we go another month or another couple of weeks, we will be at November, and that may be skipped as well. So again, just be really careful here. I feel like these numbers could be one piece that creates just havoc when we come out of the government shutdown. And it's important to keep an eye on when the expectations are for the release of those data points if we do come out of a government shutdown. Steven says, seems like this shutdown is good for the equities. It was good last time too. It started off a knee-jerk reaction bad. When I think the last one, especially the bad one, where it went one full month, it was basically a couple of days down, and then the rest of it was just rallying up, which is why when we initially talked about whether this shutdown is good or bad, I said I don't care, but historically, it's actually been somewhat bullish for it. Now, you may have seen some of the commentary from President Trump that he wants to get certain people are not going to get back pay if they've been furloughed, and that's creating all kinds of controversy as well. But all in all, I think it'll probably be fine for the markets going forward. So that brings us back to that rate cut. At this point, Big Eb just got himself another dinner from me, because I said we're not going to get 2 rate cuts. The prudent thing to do would just have 1 rate cut, but they're apparently going to do 2, and right now it's forecasting 3. And if you really want to be wild, you could go out to next year by the end of December, and the forecast says we're going to be at 3.25, which means it will only get 2 cuts next year based off of expectations. But who cares, right? Right now, all eyes are going to focus on the October 29th meeting, where we have a 92.5% probability of a 25 basis point cut. That should be good for the equity markets. The only thing I don't like is that we have all this economic data being bottlenecked, and I like to look at the trends of the data. Not that the data makes my trade for me, but it does allow me to look at the current trend of a market, whether that trend is up or down, and especially that data point. Is the unemployment rate rising, as we have seen? Is GDP slowly increasing? Is it declining quickly? Those types of things are really important for the long-term perspective on the broader markets. Andre says, it is bearish for federal workers. Well, they still get paid, right? They still get paid. And Stephen, I think every American would agree with you. Every American who's not a politician would agree that Congress and the president should not get paid. In fact, there should be $5,000 per day penalty for them. Yeah, if their job is to run our country, right, in the best intent for the citizens, whether those citizens are of their own constituency, of Democrats or Republicans or not, is irrelevant. They should, if the government shuts down, that means you're not doing your job. And one party could stonewall the other party, which is what they always do. Oh, well, so-and-so did this, and we did this, and that becomes a bit problematic. But they should not get paid. And not only should they not get paid, but every day that they don't work, that they don't resolve this, they don't get back pay. Right? This should never have happened. But unfortunately, the people that would vote on that are the people that are abusing the system right now, which is our elected officials. So, unfortunately, Stephen, what are you going to do? What are you going to do about it? Let's see. These scripted numbers are probably good for the markets. No bad data, so assume everything's good. Right. And that's why I issued that air of concern, Stephen, because when you look at the data, which we don't have, the data's been okay. But the markets, I think, are just shrugging it off. Let's take a peek at the S&P 500, which started off with a negative look yesterday, and I was expecting this to have a little bit of follow-through. Not at all. Not only did we not follow through, but we broke to all-time highs today. We set an all-time intraday high and an all-time closing high for the S&P 500. We finished the day at 6,801 and a quarter, but over the course of today's trading session, we hit a high of 6,807 and three quarters. So all in all, pretty good for the equity markets. And no news is good news. So as long as those reports stay out of your mouth or stay out of the media, fine. I still contend these markets are most likely going to continue forward. We talked about yesterday's down day. Markets made it seem like this is the beginning of a big crash. And it's like, well, that trend is your friend until the bend at the end. I mean, you guys are probably so sick of me saying it, but I think you'd all agree it's a very valuable mantra. Look at the NASDAQ. Trend is your friend until the bend at the end. All-time high for the NASDAQ. All-time high. 25,331. We were up 1.17% today. And as Margaret says, every day she's telling me, gold. Yeah, look at gold. Gold is your best performer today. 1.6% gain for gold. This is just getting into ridiculous territory. Again, I go back to one of my favorite movies. Inconceivable that it just keeps on rallying like this, which, of course, I'm very happy with it because I have several gold coins and gold bars and silver. Not bars as in the 400-ounce ones, guys. I have ingots. Let me clarify that one. Yeah, gold is absolutely crushing it. It is one of the best-looking charts we're going to see. But again, the trend is your friend until the bend at the end. And I'm really waiting for gold to stall just a little bit. JR2, Junior 2, which one drops first? That is the question. Because these two are not supposed to run in tandem. Here's the S&P. Let me throw on GLD. These markets theoretically should be inverse. The blue line on your screen, by the way, guys, is gold. And gold is absolutely outpacing the equity markets. If we go back to the beginning of the year, let's go back to January here. Roughly, if you go back to January, the S&P right now is up. It looks like, let me just get that number there. Why is it not showing me that number? That's weird. It's not showing the S&P gain there. It should be, percentage-wise, it looks about 12.7%. Okay, so 12.7% for the S&P, which again is amazing since April. Gold is not amazing since April. Gold is phenomenal since August, and it's up over 50% right now since the beginning of the year. Unbelievable, phenomenal rally. It just doesn't get much better. And Liz says, the dollar index was up today. Yeah, not much. It was only up 0.2%. And again, this should be inverse. As the dollar keeps going down and getting weaker, then you should see gold surging. And the dollar really has just been kind of floundering sideways. If anything, it's starting to gain some strength. Now, I drew this trend line, which connected the the tops of the real bodies going back into January 13th of this year, right? So there's multiple ways to draw trend lines. It is absolutely an art form. It is not a direct science, right? It's really subject to interpretation. So I did this where I see most of the top of the bodies connecting. Well, we're at it literally at this exact moment for that dollar index. So if you're looking at this type of technical analysis, you would expect there to be a little bit of a sell-off here in the dollar index and watch it push back down, which could even further bolster gold's move to the upside. Gold seems unstoppable right now. And Andres asked, what could cause a sell-off in gold? Well, any piece of macroeconomic news could theoretically derail what's going on with gold right now. But as you see the chart accelerate like this, I would be looking at volume, and you can tell that it feels like volume has been increasing over the past couple months here on gold, at least since mid-September, right? So let's say the last month, you see more volume coming in. I would really be waiting for a climactic volume moment, right? Where I see a real big surge in volume. And the biggest spike of volume I have on my screen right now goes all the way back into, what year is this? This is April of 2024. You had about 479,000 contracts traded in one day. Right now, we are looking at, for today's market, 334. Now, it is increasing. But typically when you have a blow off top, right, that point where everything's like, oh boy, here it goes, it's coming back the other way, typically that's going to be on a climactic volume spike. It's certainly one of those accent points. When you get climactic volume, it does increase the probability that things are going to reverse, because what it represents is massive buying frenzy or selling frenzy, depending on which way the trend is. In this case, massive buying frenzy. And as I mentioned the other day, that analogy of the train leaving the station, everybody's getting on board this trade. I mean, gold has like become the hottest trade out there. It's one of the best performing markets. I mean, this is better than AI stocks. This is better than nuclear stocks. This is better than meme stocks. It's gold. Of all things, gold. So I think people are piling into this trade. I do think it's overextended. I would be watching for a break of a previous day's low or a reversal pattern like a shooting star. And then I might take a stab at it. I wasn't even considering shorting gold, but I'll tell you, I am going to start thinking about it. It's just a bit overdone. Now, to your question, what could cause gold to sell off? Well, Liz is great. An audit of Fort Knox would kill gold. Yeah, I think that would crush it, right? I think that a surge up in the dollar could certainly impact that as well. I believe that if the government comes out of a lockdown or a shutdown and comes out with some clear policy moves to help reduce the deficit, to help the economy, which is a double-edged sword, right? If you reduce the deficit, it means you're going to spend a lot less, which could technically hurt the economy. I think that if we got some news that the government is going to try to balance its budget, which you can all laugh. You can laugh out loud now. That's funny. Government balances budgets. Oh, please. Then I think that gold might take a little bit of a sell-off. I think gold might sell off just a little bit there because it would give clues to the gold holders that the government's taking their debt seriously, and that could put us on a path to much greater growth down the road. That said, I don't know. I don't see the government balancing the budget. I don't see them coming to an amicable agreement here. I don't know. Again, my disdain for our elected officials is terrible at best. Terrible. I have no love or trust or faith for any one of our political leaders. I'm sorry, I'm jaded and bitter. Margaret also talks about, Bitcoin adoption by the USA. So what could help move down the price of gold, or what would help gold crash? Certainly more favorable political moves with regards to Bitcoin could cause that. If we got some favorable tax treatment, if we got favorable tax treatment, if we got more acceptance, if the government said they were going to be buying Bitcoin instead of buying gold, those types of things would all of a sudden cause money to come flooding out of one and into the other. There have been calls by our elected officials to sell some of the gold in Fort Knox and to buy Bitcoin with it. Of course, if that were to happen, gold would take a dive. Just on the news that the government was considering selling its gold in Fort Knox, of course, as many of you are cynics like me, what gold in Fort Knox? I have yet to see any audit from anybody that there actually is gold sitting in Fort Knox. Yet I've heard it my entire life that there's gold in Fort Knox, but I've never seen any of it. Yeah, exactly, Luis. What gold? I would love to see a film crew go in and actually have that gold audited. I'll tell you what. We've talked about how... Actually, I didn't talk about it with you guys. So one of the things I talk about in crypto is the ability for fake dollars. If we take gold, if we take Bitcoin, and we take fiat currencies, it is very easy to counterfeit fiat currency. Now, I know what you're saying. Well, the 50, the 100, and the 20s all have those security strips in it. Yeah, don't counterfeit at 50, 100, or 20. Counterfeit $10 bills. Has anybody ever paid with a $10 bill and had the clerk hold it up to a light and look for the strips inside? Never. 20 maybe, but always with 100, right? I feel like every time I get 100, I should just hold it up to light to be cool like everybody else is. Counterfeit the counterfeit the 10s. Now, it's easy to counterfeit fiat. It's not so easy to counterfeit gold, and you cannot counterfeit Bitcoin. If it comes from an address and arrives in your address, it's real gold no matter what. So, counterfeit gold. I interviewed a guy, his name was Paul Busby. He worked for, was it WorldCoin? I forgot the name of the company he worked for, but Paul Busby came on my program when I was doing Power Trading Radio many years ago, and we were talking about counterfeit gold, which seems weird, like counterfeit gold, like how do you test this stuff? And what was happening were the big bars, those 400-ounce bars you always see, the big giant ones, which by the way are very, very heavy. What was happening is people were making lead bars that were like a half an inch smaller all the way around. And they would take that lead bar and they would dip it in gold until it became the exact same size as a regular gold bar, because apparently the density of lead is the same as gold for weight. So the only way you would ever find out that that gold bar is fake is if you literally took a saw and cut it in half or split it into multiple pieces to test and see if it in fact was lead. I don't know if there was a gun or something you could scan to see past that half inch of gold you're going to put on it, but all of a sudden that bar, a majority of it, is no longer gold. It's a cheap like lead. So if I'm the Fort Knox people right now, I am setting up a manufacturing facility of lead bars that are slightly smaller than a gold bar, and I'm dipping them in gold until they look the same. And then once I have all that done, then I'll do an audit. See, all of our gold is here. But little do we know that those bars are not real gold. Again, this is my trust factor, right? This is my trust factor. Some people put lead in the middle. Yeah, that's what I was getting at there. No problem, Liz. Have a fantastic day. Hope you're doing well. So, who knows what's going on at Fort Knox? I'd love to see it. I heard Geraldo is coming to Fort Knox. Just like Al Capone's vaults. Wasn't that a scam, too? That was pretty fun. I love the Al Capone's vaults. Oliver says, so NVIDIA now has their own bank with all these partnerships. Is their own bank with these partnerships? Yeah. Yeah, they are. And Oliver, that's why I'm kind of nervous about it. I've mentioned this on the show a few times, and it's kind of a growing concern of mine. If we go look down here at the bottom, by the way, Magnificent 7 did great today, right? The only one that was down was Google. It was down 0.68%. Other than that, Microsoft is up 0.17%. Not a great chart, but still up. Apple is up 0.62%. Still holding. Some could argue this is a high-tight bull flag, right? High-tight bull flag. Actually, gold is more dense than lead. Now, but it's relatively close. Am I correct, Les? And I think that the issue was there that it's hard to tell. Like, it was almost impossible for them to tell that the middle of that bar was lead. So they're not exactly the same, of course. All these metals are going to have different densities and weights. But it's not something that's like I'm taking balsa wood and putting it in the middle, right? Lead, at least, is somewhat close to the density of gold, so you could fool people with that one. Crazy. So back to this one, high tight flag for Apple. This is actually a very bullish formation. The fact that it's not taking any sort of profit, maybe. I don't know. I don't think the take profit's coming. It feels like Apple looking really strong right now. And by the way, just so you guys know, one of my mentors many years ago, we're going way back to my early days of trading. One of my mentors, Fernando would tell me, look, if you really want to know the health of a company, you can look at all the financials, you get all that stuff, and that's fine, right? Because that should help you. But what you should do is you should go to the store, kick the tires, walk around, see how customer service, see how busy it is. So I have this iPhone 14, and my iPhone 14 doesn't charge through the port anymore. It's a pain in the butt. Anyway, I'm charging it through a different device. It's annoying. So I decided to go get a new iPhone, maybe upgrade to the 17. AT&T says they will give me $1,100 credit for my new phone, which basically means the new 17 is free for me. Yeah, we like free. But it's not going to get delivered for, I think he said 3 weeks. He tells me go over to the Apple store because they have them in stock. They'll honor all the credits. Everything will be fine. So I go to the Apple store, and there are over 100 people in that Apple store. It was a mob scene. It was chaotic, and I get stressed out when it's just chaotic, annoying people yelling and shouting and busy and pushing and bumping and all this stuff. It's like, I know what I want. I need the iPhone 17. I'm upgrading my phone. Even Apple does not have any 17s, no 17 Maxes, no 17 Pros. All those phones are gone. That tells me that Apple is maybe running short on inventory because they didn't manufacture enough, or the demand for those products is just off the charts. And I think that that's the second one. The demand for these things is off the charts, which means, in my opinion, Apple is going to continue to move up here. Again, you've got a bullish flag pattern, which looks really, really nice. 0.62% gain on the day for Apple. Great. But once we break out, and I think it's going to come pretty close to that line you see on your screen, which is all-time highs, right? We're kind of creeping towards that ceiling, which is $260.11 on your chart here. And right now we're at, in the after-hour session, $257.94. So we're only $2 away from all-time highs, and when that breaks, you'll probably get, a pretty significant move to the upside. Pretty significant. So there's that one. Meta. I'm just running through the Magnificent 7 here. As you guys know, I sold puts. I sold the 690 strikes, which I thought was a very safe trade. I was up 0.67% today to 717. My options expire on Friday, which I'm totally fine with that. That was like a 1% gain for 4 days. Totally fine with that trade. At this point, I think I'm totally safe. Tesla, not your leader today. We had A bit of a weaker day yesterday for Tesla. You can see a nice little red candles it gave back on some of the news that people were unhappy with their Model Y and Model 3 release of a cheaper vehicle, which really wasn't that big of a deal, in my opinion. Oliver doesn't trade Apple, unfortunately. Are you trying to copy me, Oliver? You know I can't trade Apple ever again. I would love to actually trade Apple, but in my trading plan, it's one of my rules. I'll never trade Apple ever again. I will go to my grave having not traded Apple again. And I think that that's a testament to fortitude, following those rules and making sure I don't violate my rules. So I'm curious, why, Oliver? Why don't you trade? Wow, Bobby. Good for you. TMI, you might want to keep that to yourself there, Bobby. No one cares that you farted on yourself. Let's see. Amazon, 1.55% gain today for Amazon. Finally getting out of this kind of cluster sideways choppy action it's been in for about the past week and a half, but 1.55% gain for Amazon. And then NVIDIA, right? NVIDIA, we talked about it having a retest, right? It broke out to all-time highs as it broke above that level of 184.48. Retested it 2 days ago, and now we're bouncing up. So it looks right now like prices should be moving to the upside. All right. Well, Bobby, I'm going to warn you. I don't care. I don't want to hear about your that. You can go elsewhere and talk about that. You want to talk about trading, investing? Let's do it. If not, I'm just going to block you. So just letting you know. Just letting you know. All right. Of course, Margaret. I don't trade Apple because innovation, and soon Tim Cook is stepping in. Okay. So you're doing it from a pure risk management perspective, right? I like that. I'm definitely a fan of, if you feel there's risk in front of you for whatever reason, upside or downside, then just sidestep it, right? So if you feel that way with Apple, cool, sidestep it. Looking at their facilities and the sales, for me, I'm bullish on it, but I can't trade it anyway, so I can't trade Apple. And that was your top 8 there. Oh, sorry. All right, here you go. See ya later, bud. Removed. You're blocked. I warned you. You don't get to say a word for the next 30 minutes till the end of the show. Bye, bud. We've got to keep it clean here. Family show. Family show. Keep it friendly. Yes. Only Google is bearish. Is it? Let's quickly do a quick look at this one. Why not? Let's do that. Google. Is that bearish? Is that really bearish, Rob? I can't call that bearish. The only reason you could say this is bearish is because on Monday, it didn't continue that rally and make a new all-time high, right? We could argue that it's just consolidating. The trend has been absolutely stellar since April. So you've got this great rip to the upside. Now all of a sudden, consolidating a little bit. I wouldn't call that bearish. Okay, weak. It's looking a little weaker than normal, right? And typically when you have a huge move up, this is just a breather. This is a pause. And I actually love this part of trading. When you have something that goes up so far, so fast, aggressively, and goes against what almost everybody is expecting, usually there is a pause. And that pause tells you everything you need to know about Google, in my opinion. And that everything I need to know is it's not making new lows, right? We'll see over the next couple of days. And I have a little a zone drawn out here for the podcasters. I'm looking between 241 and 236, right? Roughly. If we get below 236, then yeah, now I'm bearish on Google because it's broken a low, making a new low, and it failed to make a new high. Therefore, this trend could be reversed. But for now, this is just a pause. And it will tell us what we need to know over the coming days or weeks based off of this pause right here. And Steven said, not a lot of Google sellers there. If there were a lot of Google sellers, this would be moving lower and breaking the lows. So the good news is, after a big rally, the people who are in Google are not taking a profit. That's a great sign of people are more optimistic going forward that Google is going to continue to go higher. So I like it. I actually like the chart of Google. Microsoft. This is the more challenging one because it was super bullish for the long time here. And then it started to just have this real weakness for, a month and a half. It was weak. And now it feels like it's starting a new uptrend, which may be the next leg up. So I would call this bullish in the intermediate to shorter term trend. I guess you shorter term trend. Apple, bullish. Outright bullish. Meta. I would argue Meta looks weaker than Google. Why? Because look how long it's been since Meta made a high. Right, we made the all-time high here back on August 15th. We challenged it back on September 19th, and we haven't been moving up since. So far out of the Magnificent Seven, Meta looks the worst. Now, the only reason I went long Meta, well, I didn't go long Meta. I sold puts, expecting that it would bounce here. That's the reason I did it, as I did expect this to be a more bullish phase here to the upside, a little bit of a bounce. I wanted to buy it outright, but you know, it's $700 a share. It gets costly to go equities. I could do much more damage with the option side of things if I went directional. But in this case, I just sold the puts, collected some great premium for the week, and we'll see. Okay, so there we go. Yeah, no problem. I tried to do that, Margaret. As you know, this show flows organically. I don't come in here like Jim Cramer, who has an absolute rigid, structured schedule, what he's supposed to do every 60 seconds, right? This is just us having fun as a group. Anyway, let's go back up to our top three here for today anyway. Tesla. I think we'd all argue Tesla's bullish, right? Is Tesla slowing down a little bit? Well, I don't think so. We do have a lot more volatility over the last 5 days for Tesla because of some announcements that have been made. And we know Tesla is just a very, very dangerous thing to be trading anyway, right? It's just so volatile. I'm bullish on it long term, for sure. Amazon. Amazon almost looks like Meta, where it's just kind of chopping sideways. I mean, it's a massive range. I mean, really, Amazon's bouncing between $208 and $238. That's a $30 range for a $200 stock. You're talking like a 15% trading range. Great. Big opportunity there if you're playing the highs and lows. But right now we're in the middle of the range and not a lot of strength. So Amazon looking weak in my opinion. NVIDIA, well, NVIDIA probably looks the best because it's at all-time highs. It retested a breakout and now you had a big green candle today up 2.2%. Looks pretty good. Is Amazon a gap and go? Well, it looks like it. Are you referencing, well, there's plenty of gap and goes, but bullish Amazon till the bend. Yeah, and you could argue that this kind of was a bend, Rob, especially with what happened here on their earnings announcement on August 1st, right? That big gap down, which was a buying opportunity. I do believe I sold puts on that one that day just because it came right into a demand zone and premium was off the charts. Oh, you're talking today. Yeah, sure. I mean, it did gap up. It did sell off, though. So it wasn't a gap and go for me is one where it never closes the gap. And if you notice here, there's the difference between where it closed and opened. You notice there's a tail that goes right through that. So I wouldn't call that a gap and go. It's just a gap, filled the gap, and then started its movement up from there. So no, not a gap and go for me. Gap and go is where the tail does not touch into the gap. So that's your Magnificent Seven. I think this is one of the main reasons you're seeing the equity markets perform so well today. There was a lot of positive stuff out there. We've already gone through our top 10 here. I think, no, I didn't do our top 10. Well, why not? Let's dive into that as we progress here today. That 10-year, nothing new to glean from this one, right? The chart doesn't really tell us much other than the overall trend feels down for the longer term. We are seeing kind of consolidation over the past 2 weeks here. Not that big of a deal. Dollar index, the Dixie. We talked about this one. It's starting to show strength. I mean, this could be the very early signs of a complete reversal in the dollar index, which would be surprising to me, right? Because we hear so much about Scott Bessent and Trump saying we want a weak dollar, and other politicians too. I can see why. I understand why they want the weak dollar. That's the agenda they're pushing. But markets are driven by supply and demand. And for whatever reason, the dollar has been showing more interest. More people are buying U.S. dollars. Not exactly sure why that is, but that's just what the trend is telling us. It could be that the dollar is in demand or that people are falling out of favor with the euro. Because remember, this dollar index is made up of several different currencies. It's a basket. But 50%, it's actually over 50% of this index, is the euro. Taketsu just put it in there. Yeah, I think it's like 58%. Let me see here real quick. What is the composition of the dollar index? I think it's 58% euro, but I'm not 100% sure. No, not interested. Try that. Let's see. Damn, I'm good. 57.6% Japanese yen, 13.6% British pound, 11.9% Canadian dollar, 9.1% Swedish krona, and 4.2 Swiss franc. Actually, did I read that right? Yes. They're close. Anyway, it cracks me up. It really cracks me up. Everybody in here probably understands a product that comes from the European Union. Everybody here may have bought or purchased a product that comes from Japan. Everybody here may have purchased a product or service that comes from the UK. The Canadian dollar, using natural resources. The Swedish krona, at least I know Swiss chocolates. Other than IKEA, What is coming from Sweden? How does Sweden get in there above something like Brazil, Russia? Why not put the ruble in there? Well, because we don't like Mother Russia. We don't want to do anything with Russia. Nine. That's German. It's just strange to me that the Swedish krona is in there. I've never quite understood why the Swedish krona is in there. Other than IKEA, you have Volvo, right? Volvo is great. And by the way, if anybody has ever been to Stockholm, last time I was in Stockholm, all of the taxi cabs were Volvos, and they're all beautiful, leather, nice, high-end Volvos. Like out here at John Wayne Airport, you go to catch a taxi cab. It's like a beat-up old cop car with no springs. It's a Chevy Capri, painted yellow with holes and smells like old cigars and bad feet. Our cabs suck here in America. Anyway, sorry. Swiss cheese. No, we're Swiss chocolates, my friend. Swiss chocolates. Anyway, so that's your dollar index. And it is skewed because basically the dollar index is the opposite of whatever the euro is doing, which is why we want to go out here and look at the euro USD. Here's your Forex market. I'll look at euro USD at the bottom here. So you can see that the euro is showing weakness, therefore the dollar is showing strength. And of course, it is the opposite direction here. All right. Where else were we? You guys had all kinds of Swiss Miss hot chocolate. I like Swiss Miss. Let's see. I already covered that. We already covered the Fed Funds Watch tool. On the earnings side of things, which aren't delayed because of government shutdowns for tomorrow, I'll just throw this one out there right now because I do need to wrap things up just a little bit earlier today. You do have cannabis company, Tilray Brands is reporting tomorrow, but the main names, the bigger names, are going to be PepsiCo, Delta Airlines, Levi Strauss. I'm definitely a big Levi fan, but that's pretty much it for your earnings for tomorrow. Going for UUP, huh? Going for that dollar index. Let's do the UUP. So there's a couple different dollar indexes, but here's UUP. So this is your bullish dollar fund. Looks great. And of course, it should look exactly like the DXY, right? It should look the exact same as the dollar index. There's another one called the US dollar. So this is put out by a different exchange. And I actually like this one better. If I remember correctly, this is only 4 currencies and it's 25% each one. So it doesn't have a bias to the euro. Unfortunately, when these indexes are made, whoever creates the index is the one that, the one that becomes accepted. They're the ones that get to kind of make the rules of what goes in it. This one was created several years back, and while I like it, because I think it's a more adequate representation by being more diversified in its holdings, no one really uses this dollar index. They all look at the DXY, which is still the king. But that one is a slightly different looking chart. More earnings higher up, so small caps are bullish up. All right, well, we're going to start getting the big earnings come out here soon. Japanese yuan should have more weight on the index. The reason it's not in there, Andres, not only does it not have enough weight, it has no weight, right? It has 0. And the reason it doesn't have any weight is because I believe it's political. These are U.S. indexes, and they don't want you to, they want to mess that up, right? TED. What do you think about RXRX? If I'm not mistaken, RXRX is a pharmaceutical company, which I could care less. If you know my trading plan, I don't trade pharmaceuticals. I don't trade drug stocks because for those of you who trade pharmaceuticals and drug stocks, just remember these words. There's going to be many trades where you crush it and you're like, man, I'm killing it. I love it. I did great in this Regeneron Pharmaceuticals or something therapeutics. Great. And then there's going to come a day where that thing absolutely puts its size 15 boot right up your backside and tears you to pieces on a drug approval miss or something. It's not worth the risk, in my opinion. That's my style. That's my philosophy. So, Ted, I don't touch anything to do with drugs or pharmaceuticals unless it's something that is too big to fail, like United Health, right? That's not a drug stock. That's health services. I think that's a little bit different, and I'm still bullish on UNH. So let's go RXRX. At Recursion Pharmaceuticals. All right. Well, first off, the trend is atrocious. It's bad. Basically, why did you buy this one, right? And I'm not trying to sound like a jerk, Ted. Please, I'm a tough love kind of guy. If you look at it today, you're loving it because you're up 16%. But now tell me this picture. Why would you buy this? Right? It looks like crap. Sorry. Recursion Pharmaceuticals was up at $42 back in 2021, and then basically has just done nothing ever since but go down lower and lower and lower and lower. So for me, I wouldn't touch this with a 10-foot pole. This was a straight gamble, and somehow you're rewarded today with a 16% pop. Now, if I'm at a 16% pop in something like this, I would probably sell half of it and trail stop the second half. I just don't trust it. RX is a boutique biotech. Hopefully, I don't know what they are, but anything down in that $4 or $5 range, I don't like to trade them. In my opinion, and this is just my opinion, if the stock is trading at $2, $3, $4, $5, there's a reason it's trading at $2, $3, $4, $5 because they're not doing well. They're not showing earnings growth. They may not have that kind of potential, and it's just falling out of favor. And I know what you're thinking. You're like, well, this could be the one that, they come out with the new diabetes drug and everybody uses it and it goes to $1,000 a share. Sure it could. But my goal, as all the regular viewers here know, is absolutely not. I have no interest in hitting a home run. I'd rather not hit a home run. If it happens, it happens, and I'm fortunate and happy for it. What I want to do is I want to get involved with base hits. And the only way that I, from my style, can consistently get base hits are things that move consistently, have nice trends. This trend, I would argue there really isn't one. It's choppy. It's all over the place. This is a hope and dream stock. So, sorry, Ted. I don't mean to be rude, but have I heard of IREN? I guess it depends in the context of what is this a stock? Like IREN Limited? No, I've not heard of IREN Limited. And I don't know what's going on with IREN Limited. Let me check out the volume on this bad boy. Tremendous amount of volume. No idea who IREN Limited is, but what a chart, right? What a chart. And this is why you set a trailing stop and let your second half run. Just let that thing go. So, yeah, I don't know what they do. I can't make any comments on that. At least what you're dealing with there is something that has a really nice trend. ASTS. Yeah, this one, I heard Space Mobile, they got like $500 million today for operations, which that certainly is going to be a big one. And these are also big sectors that have an incredible opportunity. With biotechs and drugs, I think that there's a, the first one was the IREN was a Bitcoin miner. Interesting. With something like AST, Space Mobile, or anything to do with space exploration right now is such a hot topic that it's easy for them to get money. Same thing is, okay, got it. So IREN is a Bitcoin ETF. Cool, got it. Anything to do with space, I would be much more inclined to invest in something that has to do with space exploration or AI technology than biotech or pharmaceutical. I feel like that's a crowded space, and just one FDA approval and you're done, or misapproval. IREN has AI news. All right, I'll check it out. Checking that one out. MicroStrategy. So MSTR. I made a little bit of a better day today. It was up 0.73, but not much. It wasn't a great day. I needed to stay above 315 by Friday. So I got 2 more days for it to stay above 315. 315, I think, is that a 5% slide between current price? Let me see. Let me turn my snap back on here. I think that's about a 5% slide. Yeah, I'm looking. As long as it doesn't fall 5% in the next 2 days, I should be fine on my position. If it does, well, my position in MicroStrategy is going to get a little bit bigger than it was before. But I'm not so worried about that one now. You look at United Health, which unfortunately my shares got taken away from me. Man, I was selling puts. I wanted this thing in my portfolio. I'm very bullish on it. I've been saying that since back here and was in the 200s. And I got so lucky on this day. As you guys remember, I bought it at 271 just before the Warren Buffett announcement, and it was wonderful. Put Bitcoin up with MicroStrategy. Sure, let's check that out. Let's go. Let's do this BTC here. We'll add on MSTR. And there we go. So MicroStrategy is the overlay here, which obviously had a pretty significant drop. They are moving together loosely, but it feels like there's a degradation of MicroStrategy, right? Notice the gap between them is getting bigger. As you would mention, they're diverging. They're getting further apart. And I think that may have to do with just the overvaluation expectations of MicroStrategy. Not sure if that's going to come back and surge to the upside right now, since what we have on the screen here, if we go all the way back to June of this year, June 24th, MicroStrategy is down 12.26%, whereas Bitcoin is up like 17%. So pretty significant difference there between these two. And even if we go back further to let's say the beginning of the year, which is roughly here, same thing. MicroStrategy down about 17% and Bitcoin up about 23%. So definitely a big difference between the two. The question for me in my mind is, does MicroStrategy start to surge back up here and recoup and move to the upside, or does Bitcoin start to pull back down and cause further declines in MicroStrategy? So For the position I have in MicroStrategy right now, I'm not that happy with it. Obviously, I'm underwater overall on that position, but I've been selling calls aggressively against it every week and collecting more premium. I've actually been selling some puts too, which I'm taking out of the my premium for my big position. Sailor should answer for this. Well, I don't know if he necessarily feels like he has to answer for it, right? Prices don't necessarily have to follow the underlier that lockstep. Remember, MicroStrategy is not just Bitcoin. Now, we know that they are a Bitcoin treasury, but they still are a software company, and maybe they have revenues, losses there that might be impacting this number as well. Big Boy's waiting for earnings at the end of the month. I don't know. I don't think earnings aren't the thing that impact MicroStrategy. I mean, MicroStrategy, I don't know. What are they going to do? I don't think the earnings are going to be a big deal for MicroStrategy. The last one was a ridiculous one. Let's look at the numbers there for their last earnings announcement for MicroStrategy. Why am I not seeing the earnings? Did they get deleted on here? Oh, because I have an overlay. I'm sorry. Let me take this off and put on MSTR. We'll go look at the last earnings. Their last earnings was just absolutely ridiculous. They were expected to lose 9 cents per share, and they made $32.60 per share. Right? Like what? That's crazy. Before that, they lost $2.41, or they expected to lose $2.41 per share, and they reported $16 loss per share. So who knows? Who knows what's going on here? No, I'm not trading coin. I don't know why. I don't know why I'm not trading coin. It has a lot of volatility. Premium's going to be pretty good on that bad boy as well. So you would think I'd be more involved with that one, but I have not. I have not. Right now for Coinbase, things looking pretty good. You could argue that you're seeing a beginning of a flag formation build up over here. BMNR maybe earlier iteration of MicroStrategy. Well, BMNR is just Ethereum. It's actually better, in my opinion, Bonnie, because once the rules are clarified by the regulators as far as what they can do with that Ethereum, my guess is that Tom Lee, the guy who runs BMNR, Bitmine Immersion, he will be staking his Ethereum, and that should actually drive the price of ETH up significantly. But there's a lot of different, Bitcoin mining firms out here, Bitcoin treasuries. I have a whole list here at the bottom of my screen on the bottom right-hand side. You notice here, most of them look pretty good today, except Orbs. Orbs getting absolutely crushed, and if I remember correctly, Orbs is the one that is using WorldCoin, which is a joke. So this one I would expect to continue on down, but you have other ones. BREA got delisted or something. They changed its symbol. BREA was the Solana one. I don't know what they changed their name to, but I'll check that one out and hopefully get that better. ETH is to BMNR as MicroStrategy. Yeah, well, BMNR is to ETH as MicroStrategy is to Bitcoin. Yes, I get that. Both of them are looking to buy 5% of the total supply, but there's a lot of different treasuries out there that give you potential opportunity. But BMNR, yeah, I'm fine with BMNR. There was a couple that were Solana, which I liked, and then that was BREA. I think there's another one, not CEP. One of these two is a Solana treasury, which I like as well. BNMR and the like may feel some pain in the next interest income side of if rates fall. Well, it shouldn't have too big of an impact. Remember, lower rates mean cheaper money. Cheaper money means more capital. More capital means people have more money to buy things, stocks, crypto, whatever. Sol T is another Solana one. Not maybe what they changed Bray to. Oh, this Sol T is, yeah. Sol T is a double leveraged Solana. I don't mess with that. Nope, no sir. Would you buy Ford a bit lower on the weekly hammer? All right, let's do Ford, and I'm going to wrap up. You guys are all of a sudden going into all kinds of trading questions. Would I buy below a bit lower in the weekly hammer? So let's go to weekly. There's your weekly time frame. And you're asking like this one back here. I think if you just put your line across the low, which at least going back into September, that's right around $11.31. Would I be okay, maybe selling some puts at $11.31? I would do weeklies so it doesn't get too far away from me. Clearly something's not looking good here with Ford, and they're not, the earnings aren't coming out for another couple weeks. So not a huge fan of what I'm seeing here with Ford, so probably not. Probably not. Okay, the daily hammer, a little bit different. It's still right around the same, right? The bottom of that daily hammer would be lower than that, would be about $11.31. So I'd be okay with that. As Steven says, Ford is a dog, better places to put your money, in my opinion. I would agree with that. If you look at this massive sell-off that happened in Ford, it looks like the end of the world. Well, it's only down 8%. Now, granted, it's 8% in 2 days, but I'm finding myself more attracted to higher price securities And the reason is when it comes to options, I don't have to sell or buy as money. I mean, if you look at what with Meta, I sold the 690 puts. Well, if I'm doing cash secured put, for every one put I sell, I have to have $69,000 on hand. It's just a lot less transaction cost for me on something that's got very high premium anyway because of its volatility. So Ford probably doesn't have that much premium because of its volatility, even though it's sold off aggressively over the past couple of days. All right, after the e-card tax incentive stop date, Ford started dropping. Well, it wouldn't surprise me. I mean, it's Ford. I don't know. That doesn't look good. All right, a Ford put will earn you 10 cents. Woo-wee! Well, hey, 10 cents, And that's the thing, Steven. Like, if I'm going to sell a put on Ford at 11.30, and let's say I collected 1% for whatever the month, I make 11 cents. So now I got to sell, what am I going to sell? 50 of these things, 100 of these things to make any money? I'd rather sell, a few of the, sell 5 or 10 of the Meta and collect much higher premium. All right, that will do it for today, guys. We already talked about the economic calendar. You don't have much happening for tomorrow. Obviously, all the government stuff's going to be shut down. Let me remove the filter here so I can show you some of the other international markets. But you do have Jerome Powell speaking tomorrow. Remember, he is not a government person, so he will not be censored. That's going to happen about 8:30 a.m. Eastern time, so that's an hour before the markets open. You also have tomorrow wholesale inventories, but these numbers may not be released. Natural gas storage, et cetera. So that is all question marks as to what actually gets released because I don't know which one's government and which one is not government. And on the earnings, we already covered this. PepsiCo, Delta Airlines, Levi Strauss are the main ones, and Tilray for those of you who like your weed. All right, that's going to do it for me for today, everybody. Today's Wednesday. I thought it was Thursday. For Thursday's show, I have not talked to Larry. He's going to work in Boston, so he will not be on the show for the next couple of days, or he won't be available for the next couple of days. If there's something you want me to discuss on tomorrow's show, let me know. Email me, tradermerlin@gmail.com, or put your comments down below any one of our YouTube videos. It all circulates back to me. I'll include those in today's show. So I have one other question I meant to get to for Jay, but Jay, I'll get to your question on Bitcoin and the validity of cryptocurrencies on tomorrow's show. So thank you, everybody. Have a fantastic remainder of your day. I will see you mañana.